Very exciting. So we are now officially in the final panel for the day. And this is panel number 5, Global Smart Infrastructure Funding and Financing. One of our participants, Elise, is zooming in. She, I think, had some car trouble earlier, and so we were able to, with technology, bring her in live. So I will introduce Peter Adriaens, who is a professor of civil and environmental engineering at the University of Michigan, and I will hand the panel over to you. Thank you.
Awesome. Thanks, Francine. Good afternoon, everyone. Thanks for sticking around for this last hour. I know this is a tough time, 4:45 to 5:45. So as Francine said, I'm at the University of Michigan CEE. I run a center on infrastructure finance, particularly with focus around data and digital infrastructure to figure out, I guess, how, digital opportunities improve or change our business and financing models around infrastructure assets, transportation assets, and beyond. We heard in the previous panel a lot of discussion around business models and use cases and absence of business models and absence of use cases potentially for connected autonomous and others. And so the questions around what's viable, what's not viable. I'm here joined by an awesome panel of 4, 3 in person and 1 virtual. So we have Jason Koenig from ITE. We have Mark de Laverne from CAVNU, Jeremy Ward from P3 Mobility, and we have Elise from the DOT. And I'll let them first introduce themselves, and then we'll kick it off. Why don't you tell us a little bit about your background, and sort of what's your lens, I guess, of your company, your organization on the funding and financing side around mobility and transportation.
Can you hear me? There we go. Hi, my name's Jason Koenig. I think I represent part of the private financing of this discussion. So I have been investing for about 25 years. I started about 10 years ago a firm called ITE Management, which stands for Industrial Transportation Equipment. And we're about a $7 billion fund. And we started investing in kind of old line, if you could call it, old line transportation. So we are one of the largest owners of freight rail, container chassis trucks, aviation, and now we're slowly migrating into kind of the next generation. Part of it is driven by environmental, part of it's driven by that's where the market is. So a lot of the discussions that we've been having here, we're kind of dealing with day to day, particularly the last conversation about how you finance and fund all these opportunities. There's a lot of historical precedent for how all this kind of plays out, generally speaking. So we'll try to keep you engaged in this before dinner.
Hi, good afternoon. I'm Mark de Laverne. I lead external affairs and project development for CAVNU. At CAVNU, we are a company with the mission of unlocking roads for automated transportation. And in sort of more plain speak is pretty amazing what is happening, everything from L2, L3, L4 on the vehicle side. But we believe that roads can be part of the solution to get those benefits that are promised by all these technologies out to people in society quicker. And why we are part of this is we are looking to bring private capital to our projects. And kind of explain why we think that's important, particularly in the technology standpoint. But we have a number of infrastructure investors that are investors in our company, as well as kind of have relationships with a lot of other infrastructure investors of how we're going to sort of look to fund these next projects, and be remiss if I didn't mention sort of the partnership that we have with Elise and the team at MDOT on one of our early stage projects on looking at 94 and developing kind of what we call a CAV lane or sort of a next generation of what we feel like managed lanes are going to look like in this country.
Great, thanks.
Hi, I'm Jeremy Ward. I'm with P3 Mobility. I'm probably a lot newer to the cab space than most people in this room. I've only been working in it for about 2 years, but I've got a pretty extensive technology background and actually worked in what I think is a really similar industry, which is the healthcare industry. I did a lot of the healthcare modernization that was part of the Obamacare Act. And it's actually, interesting because they face a lot of the same challenges. So there's a lot of government regulations. There's this push to modernize technology. And you're dealing with a very complex ecosystem of a lot of different stakeholders. But at the end of the day, the goal is to improve people's lives. There's also this kind of sense of lack of progress in both spaces. But I will say, when I have a really rough day in the CAV space and thinking about the lack of progress that we're having, I think back to my old colleagues who in 2019 were still using green screen mainframe computers to do things, and I say, at least we've made it to level 3 so far. I was actually surprised when I got into the space because I'd never really heard about CAV technology, specifically around the VDEX side and the infrastructure-based technologies, and it was just really amazing to me. But I think, like many of you here, you become familiar with the things that are holding up the industry, and so that's where P3 Mobility comes in. When the government mandate was abandoned for connected vehicles, we kind of recognized what I think everyone here recognizes, is that there needs to be business models that support this technology, and there needs to be ways to innovatively finance this technology. And so P3 Mobility is a software company in the CAV space that has built out a technology platform that enables these business model and financing options. Our goal is to expedite the adoption of connected vehicle technology, and we want to do that by creating the platform that can create P3s, or public-private partnerships, for digital infrastructure, hence the name P3 Mobility. And so in my role at P3 Mobility, I'm the director of operations. I handle a lot of day-to-day activity, as well as working on the projects that we're involved with, which I'll hopefully talk about soon.
All right, Elise.
Yes, thank you so much. I'm Elise Felposh from the Michigan Department of Transportation. I'm here representing the infrastructure owner-operators side of the room, really looking at the ways in which we blend the traditional side of deployment and financing with some of these new and very exciting diversification methodologies for funding. So I know that in Michigan, we have had a large-scale investment in connected and automated vehicle technology that has been expensed over the past number of years, and looking at ways in which, as we look to possibly upscale to accommodate the new autonomous vehicles that are slowly starting to come into the market now, looking at the different ways in which we can look at different business models to be able to enable that in a much more whole-scale way. And looking at the different ways in which we can do that. So very pleased to be able to be here with these upstanding gentlemen and speaking about this today with you.
And we're equally happy to have you virtually with us. So it's wonderful. So let's start off with a couple of questions before we engage the audience. Lisa, from your perspective, there's been a lot of talk about the funding and the financing, right? And of course, on the funding side, the recent infrastructure laws and whatnot, but have created sort of new opportunities, and sort of, lobbing this question towards you, and picking up from where the previous panel was, where do you see how these laws can help scale adoption of sort of new mobilities, as well as the infrastructure that supports them?
Yes, thank you so much for that question, Professor. So, with the passing of the bipartisan infrastructure law, that opportunity really led to the fact that we had $550 billion that was expended or committed to be expended over the next 4 or 5 years here for infrastructure in this nation. Now, not all of that obviously is designated towards innovative technologies, but it was really critical that there was language that was included to allow for the inclusion of innovation, connected automated vehicles, this type of technology in that financial availability of that money. So at this point, that money really has come available via these grant opportunities, which are competitively bid out. So when you start looking at this opportunity and the acknowledgement from a national level of the fact that we need to start incorporating this type of technology into our traditional infrastructure type deployments, once we combine that with the idea, our traditional funding, which is genuinely federally funded as well, but at a much smaller scale. So looking at the ways in which we can really look as a department to figure out how can we best utilize these funds that we have, even on the small scale, to be able to start looking at the ways in which we plan out our growth has become really critical. So we at the department have established an operations-focused template, as well as our traditional ITS template, which allows and shows this focus towards these kind of larger scale corridor style deployments to showcase the large-scale connectivity. And so it's with this focus that the department has started to look at not only the ways in which we can utilize the traditional methodologies for funding, but starting to open up the gateways for more of these partnerships, these P3s, these different business models to really start to facilitate not only the deployment of this type of technology, but then also the operations and maintenance of this technology. So it's really challenging us to look at the ways in which we view that traditional style transportation deployment and start to look at the ways in which we can really change the views and change the perspective to enable this type of technology. We have recently had Senate Bill 706 that was put forward as part, and perhaps Mark will talk about it a little bit more later, but will allow for the designation of AV lanes and roadways within the state of Michigan. So that was something that, again, showcasing that commitment to innovation, that allowance to be able to continue to move forward and really kind of upscale this type of technology in a very real way, where it moves away from the pilot and starts to get into that traditional style deployment. Connectivity is that enabler, and we really strive to deploy this type of technology to not only enhance the innovation in the space, but to really start to look at the ways in which we can save lives in the state of Michigan.
Yeah, thank you. Since you're working with Mark and with Mark and Kavnu, just ran out of battery. Yeah. With Mark and Kavnu, and you're looking into new kind of public-private partnerships. I'd like to hear from Mark where the private co-financing, how you work that into these new P3s that you're thinking about in the context of your project.
Yeah, so at a high level, right, like what we're trying to do is essentially de-risk technology a bit for the public sector. Story I tell, and Kristen White can probably tell similar stories as well. She used to be having this job as well. But when I was in the city of Detroit, like one of the last procurements I had to look at was basically like picking an algorithm, right? That is not like what my experience is in to sort of evaluate like A versus B to say like this is a better algorithm, right? My job with public sector was to say like, these are the outcomes that we're looking to drive. How do we go about and do them, right? And traditional procurement, makes that tough, right? Like it's hard to say like, prove that you're the safest, right? Prove that you're going to be the most equitable. And then you sort of add technology and then you're just sort of guessing. And I think that, myself and others, that have worked in public sector can sort of say like, here are success stories and here are failures of when we did technology procurement, right? Because a lot of time we guessed and we guessed wrong. And so what we are trying to do is kind of build partnerships with the public sector, MDOT being one, where we're saying, we will deliver this innovative technology, which we believe will, save lives, improve traffic congestion, create opportunities for new types of transit, things like that. But do it in a way, right, where we will do initial investment and put the capital into the project, and then work to be able to recoup that investment, and whether that's recouping that investment from user fees, right, like a traditional managed lane type model, to recouping that investment through things like performance outcomes, right, of saying like, are we building a safer road, and are you willing to pay for safety? To then sort of, diving into potential business models. I mean, there's a little bit of a conversation in the last one about freight. And yeah, I mean, there's a clear business model around autonomy in freight, and whether that's long haul or drayage. And, having infrastructure be part of that conversation as well. So, and then getting into operating it. And then the third part is being on the hook to continually innovate, right? Like we are not looking to sell MDOT a widget or anyone a widget, right? Like that's not our goal. Our goal is to look to be able to be a long-term partner, and part of that partnership should be on us to continue to innovate, right? So if there's a reason that we need to, upgrade sensors, or we go from CV to X to something else that comes up 10, 20 years from now, we're on the hook for that, right? So again, begins to de-risk that piece for the public sector.
So what might be, just to follow up on that, what might be helpful for the audience that is not familiar with Kavnu, most of the local folks here probably are, but what is the actual facility? What's the physical asset that you're seeking to finance or privately co-finance and derive funding from?
So we feel like the ability exists to accelerate automated technology on the roads by essentially simplifying road design, which includes some road work, right? For our Michigan project, what we're talking about doing is widening the road a little bit to provide physical protection between what we call the CAV lane and the general purpose lanes. It includes deploying sensors, a dense deployment of sensors along the roadway. So that's ITS poles, cameras, radar, fiber, and everything that goes into it. And then so that those sensors are providing all the information of what's happening, 5-10 miles ahead back to vehicles. And then the third piece is a super high level of operations, right? Roads today, depending on, who is operating them, if something happens in the road that isn't an emergency, you're relying on a crew to get out there when they can. And we feel like we're going to need to have a much higher level of operations on our corridor. And not expect, again, the government to pay for this, right? So, having that be part of our business model. So those three core tenets are what we believe can really kind of move the needle. And whether we're talking about level 4 trucking in the Sun Belt and then expanding that across the country to ultimately hands off, eyes off, or level 3 passenger car trips, as well as level 3, level 4 transit. But all that costs a lot of money, right? Touching a road costs a bunch of money. Putting up a lot of sensors costs a lot of money. I mean, I think Elise can probably talk about, the cost of what DSRC was and sort of then having to sort of scale back from that. So it's a significant amount of money. And you look at all the priorities that government has, even with, all this money coming through, and to say, like, we're going to take this bet on the future of roads is a tough thing to do.
So that's a great opener to Jason, because in these public-private partnerships with private co-financing wants returns, right? That's not free. So I'd like to sort of get the perspective from a private investor on how you're looking at financing these type of assets.
Well, it's a lot of these projects that we're talking about and listening in this room and over the course of this afternoon, they're enormous projects, and this is an enormous country. And the way that we've gone through historically in this country to finance these are these public, it's really public financing, right? You can go all the way back to the beginning of the railroads. It was basically the federal government funding it. And where people made money was actually in ancillary businesses around the railroads. The railroads actually made no money at all. But it was, when you hear about all these robber barons, all the people that, that built the universities and the like, they made their money by financing the construction. Right? So it was small little ancillary businesses, but they relied on the government and the federal government to do it too. And I think one of the things that we look at as an investor is, these projects are, we can't afford to have as we often say, we're 1 quarter away from being out of business if we do make bad investments. So we can't afford to take the risk of these big projects. So we really heavily rely on the federal government to promote the big infrastructure, and then we're looking for companies or opportunities around the margin, like not around the margins, but starting with smaller projects that are more ancillary. So sensors and data and information, building the big broad infrastructure. As you said, it just takes a ton, and most of these projects aren't. You as you talk about some of the different infrastructure projects, they're not wrapped up in a bow. It's all very. In some respects, it ends up being very hodgepodge. So, for example, when you saw a lot of the supply chain problems that were going on this year, you think supply chain, it sounds like very fluid and easy. But you have somebody owns a chassis, and somebody owns a trailer, and somebody owns a train, and somebody owns the warehouse, and somebody owns the land, right? And all of these things come together in a very, frankly, chaotic way that it's amazing that it works at all half the time. So pulling all back from that, what we're generally looking for is you got to start small. A lot of times we look at projects and infrastructure projects where people are trying to do too much. So as we look toward the opportunities, can you do the thing that can you define your business model to one core idea and start slowly growing out of that? And then you got to make a return, obviously. And so I'm going to ramble on for one more second. We heard in the prior discussion there was talk about trucks moving across the country and why can't we finance that? Well, the big problem with that is because we have no idea what they're worth. right? Because it's new technology, and if we want to buy it, does it have a residual value? Can you sell it later? Nobody has any idea. So it becomes harder and harder to finance it and harder to fund it. It's one of the reasons why leasing a Tesla is so expensive, because nobody knows what the residual value of a Tesla is going to be later. Can you sell it? So, I would say as you think about these projects, it's good to start with a core idea and kind of slowly expand on it.
So are you focusing on, sorry. Yep. Are you focusing on lending, commercial lending, private equity? What's your approach to these railroad projects that you've been talking about, or other infrastructure projects you're thinking about?
Right. So my background is private equity. So for those of you that aren't familiar, it's owning the asset, right? It's putting up equity. But because these businesses are so capital intensive, you have to borrow tremendous amounts of money. So for example, with our projects, we put up $1 and we borrow $3 to $4 for every $1 of equity. In order to do that, you need to kind of have a reasonable rate of return. And so, for example, we've seen a rising rate environment right now, which will crimp a lot of all the things we're hearing about today, right? Because it's too expensive. The cheapest cost of borrowing right now, is probably 6%. So you got to start with a 6% return, and then you got to make more money on top of that. So it's a pretty levered and layered opportunity. So again, when you hear some of these projects, what the private market is looking for is, what's the business model where I can generate money right away, right? So I can service my debt, so that I can go out and expand more and more. And again, it's part of the reason why you see, frankly, a lot of new technology and new infrastructure, it's continually going bankrupt, because you are expanding very quickly, the market changes, you go into a recession, things take longer than you think, you can't service the debt. And so it takes decades, and you finally get around there. Again, I kind of look back at the railroads, because they're a good example of this. The railroads took 50 years to build out. They were continually going bankrupt all the time. Nobody made any money on them. The railroads finally became profitable in 1973, after they'd been being built for 100 years. And that's because the government took away a lot of regulation. It's another thing I hear a lot about in these conferences. There's so much regulation. And so the government took away a lot of regulation, things consolidated, and then they started becoming profitable. I think that answered your question.
Did great. We'll follow up on that. Actually, one of the things that you pointed out that's great for Jeremy to comment on is you start with smaller defined projects. And I know you're very heavily vested in smart intersections. So can you talk a little bit about what a smart intersection is? I mean, some of you may have heard about that earlier today. But think about the business model around smart intersections and how you think about the financing.
Yeah, sure. So that's a great plug for the Smart Intersections project, which is run by Umtree, and P3 Mobility is a partner on that project. But what a smart intersection is it's a technology-enabled intersection that often includes components such as infrastructure to vehicle communication, sensors, camera, really just trying to create safer, more efficient roads for everybody. And so that's an area that we've been exploring in terms of business models because it's something that a local jurisdiction has control over. And what I say that is what it allows is new opportunities to create value for vehicles on the road. And so something that we're exploring in the Smart Intersection project is the concept of signal priority and determining, is there a way that commercial vehicles would be willing to pay a subscription for signal priority? And what that does is generates a new revenue stream for that local jurisdiction, which allows them to create public-private partnerships and pay for some of the infrastructure and ongoing operations and maintenance of that infrastructure.
So I want to bring that back to DOT, and not that I want to plug you specifically on DOT, but so the whole thought process around this P3, because we're starting to integrate as we go smarter with smart city, smart roads, smart everything, smart intersection. We're integrating digital infrastructure in public infrastructure, right? And that sort of creates a whole new hybrid kind of model that we think about. So what is really public infrastructure? When you ask many Europeans, it will give you a different definition from an American. I guess what public infrastructure is. So So as a private sector company goes and invests in digital infrastructure in a public road, collects the data, I guess, on that asset, potentially can monetize that data one way or another. How is that? I mean, from DOT's perspective, I mean, how does that change sort of the ownership management structure, potentially availability payments that you might make into, bond financing or whatnot? I mean, how does that change the hybrid structure? How does that change DOT's perspective on infrastructure? Any thoughts? Sorry, Elisa, that was for you.
I wanted to make sure. I didn't want to butt in on Jeremy's
Everybody can butt in,
question.
but I was directing it to you.
Yeah, so I think it's a really challenging conversation, and obviously one that needs to continue to move forward. As you start looking at the digitization of our infrastructure, and you look at the ways in which the DOT traditionally has handled these types of data agreements, data distribution, we're not there to monetize the data that we have. Ultimately, we're there to improve safety, and that's kind of always been the stance that the DOT has placed. We are developing tools to better utilize our resources. Providing the safest infrastructure and data has always been paramount for the DOT's perspective. So trying to look at the ways in which you can start to open yourselves up for monetization is something that is fairly foreign from the DOT's perspective. Not to say that it wouldn't be something that, we would be open to conversations about, but it is something that there's a pretty staunch stance on that monetization of what is viewed as data that is paid for by the taxpayers' dollars.
Yeah, so as I think Michigan is one of the first states in the union, I mean, you guys correct me if I'm wrong, that allowed the right of way to digital infrastructure companies to actually integrate their technology in public roads. Is that right? So there was something that had to go through, that had to be approved by the state legislature, right? So the question is, what are the implications of doing that? And can you do that? I mean, now you go to Ohio. I mean, I guess that stops, right? That opportunity. Or you go to, then you get your state boundary problems and your scalability problems, and similar to the railroads, I guess. So did you have a perspective on kind of how that conversation went to give private companies the right of way? And I'll ask Mark also, because of course you guys were very heavily involved in that conversation too, I imagine.
Yeah, so I will say one point of clarification off of what I said previously. I think there's a difference between data that is gathered in the right of way by private companies, because then they own the data. However, if it's data that we are generating and gathering, it has a different implication. So I think that's a very important clarification, both to your question and then the implications associated with allowing that deployment within the right of way of the private entities. So in that respect, I think that is a important clarification that then does open itself up to allowing this idea of the monetization of data gathered on the public roadway.
Because Mark, you had to negotiate that probably for your project, right? Or leverage the
Yeah,
law.
so I mean, the one example is we've been doing some testing on I-96, and MDOT had dark fiber there for municipalities, but it was not meant for private companies to utilize. It was put there for, and Elise and the team there sort of worked some policy magic to sort of create a program from a pilot standpoint so that we could utilize that fiber that was not being used. But as far as the data piece, I mean, from us as a company, right, data monetization is not sort of in our any pro forma that you could find on anyone's Google Drive, just because it's the data that we're collecting off the cameras, we just haven't seen to be of use to anyone we've talked to beyond sort of the use cases we're doing, as well as providing it back to the DOT. When you start to even get into things like conduit that's laid by federal dollars, right? And do we need to kind of go build again, or can we utilize that conduit poles? Things that have been paid for through different funding sources and how they can be future-proofed, or if you're going to have 3 different poles right next to each other because of federal restrictions, local restrictions, and 2 private companies saying I'm not going to allow this other company to use my pole and things like that. So I mean, part of this is going to be for us with MDOT is some lessons learned. of how we sort of share and sort of are good stewards of the right of way. Which is, part of, MDOT's job is to push us, right, and say, like, what do we want and what is important for us, and I think, that's, we are not looking to be, a concessionaire that comes in and says, like, we're going to buy the road, right, like a number of places, we see this as being a partnership, but going back to the point earlier, it needs to be a long-term partnership. Like, it cannot be something where, 5 to 10 years, we are not making $200 million back on this project in Michigan. It's a much longer term partnership that needs to be done. And obviously, there's going to be new things that come out, and maybe sort of some of the data we are gathering will have different value to, drones or something that we're not even beginning to think about. And I think that's going to be some of the challenges, and being able to sort of say, like, can we sort of work in partnership, and as these new business models come up, how is it something that, if we're collecting data, but the data is valuable to MDOT or an MDOT partner or things like that, we can sort of be able to create a way that it's a win-win-win piece. Good.
I might add a little bit that you really want to keep the public sector out of the profit-making part of the world as well, just because the incentives are so very, very different. It's coming from politicians, it's coming from different municipalities. So the drivers, and because the governments and the public sector is so big, right, it dwarfs any sort of private sector in aggregate, that it would have too much power. So on the investment side, we would hate to have them there, because we could never be as competitive, and we'd never be as efficient. Additionally, you need somebody, when you're planning and thinking about these infrastructure projects, to think super long term, right? Like, you're reading the news every day on your phone, you're seeing quarterly reports, you're seeing quarterly earnings, everyone's checking, what their portfolio is all the time. Somebody has to be thinking, 30 years down the road. And so having the public sector not think about today's monetization, but longer term, again, kind of lays the foundation for for a lot of the great things that ultimately transpire, and giving the private sector the opportunity to kind of come in there and figure out ways to be more creative around it.
And I'd like to add to that, there's going to be a wide spectrum of what these projects look like and what the P3s look like in the future. So as part of the Smart Intersections project, we're doing interviews with DOTs and transportation agencies across the country, and we're finding that the way that they approach the private sector, as well as the way that they think about these different opportunities to potentially have new business models, it varies completely differently. So a city in Michigan is going to have a completely different view than a toll authority in Florida or Texas. And it's going to be really up to that specific agency to think about what their goals are, what their current funding streams are, what their current skill sets and resources look like, to determine what's going to be the best option for them going forward.
Okay, we have a question from the audience. Go ahead. Is there a mic that can go around, or? Okay, great.
I got a pretty strong voice. My name is Steve Braddock with EV Charging Pod, and we design and build microgrid solutions to help support with the EV charging issues, where we could be 100% off grid. So with that being said, we've worked with some of our customers from a development standpoint, and even Schneider, for example, earlier I just talked about this with the previous discussion panel, and this is a project with 35 chargers. It was $10 million. But then if they didn't have enough power on the grid to support it, there's another $10 million. So is that something that you see that investors can support, or would be interested in supporting that type of distributed power or microgrid type of solution to support the power generation for EV charging?
The short answer is yes. I mean, I've looked at a number of companies and opportunities, and they're all very new. Like, to your point, they're pretty small scale. So yeah, we're looking around at those all the time. The problem that we're finding right now, and again, this is like any technology. I pull back a little bit. Like, there's a great quote by many of you are familiar with Peter Thiel, who he said a long time ago, I thought I'd get flying cars, and I got 140 characters. And now, we're kind of getting flying cars. Like, the stuff is amazing that's coming out there, but it's so infrastructure and capital intensive that you need to be able to deploy massive amounts of money behind it to make it profitable. So, like, again, we're deploying right now we've deployed over the past 10 years about $7 billion. We love these ideas, and then we look at it and think, well, how do we grow it? How does it grow? And the problems you're seeing right now is the one that you hit, which is the grid problem. Right. You can't you can't get enough power. Right. And so
we're quite busy just because of that factor.
Yeah.
So another question I have, if you don't mind me asking, have you heard anybody talking about carbon credit financing?
Yes, but I'm not. I can't speak well about it.
Okay.
But yes.
Okay. Thank you. Thank you.
Actually, let me make an additional comment to that. And this is a European, well, it's actually US invested in a European charging network. And of course, Europe, because of population density, is very different. But the way they set it up to actually and finance the cost of additional utility, I guess, power generation, as well as the actual infrastructure, they negotiated with 11 automakers, EV automakers, offtake agreements, I guess, that we will guarantee sort of as a floor buy this much power from all these chargers. So now you have a guaranteed offtake agreement now from a lender, I guess, into that project. Now it starts making sense. Right? You can say, okay, well, they can pay back that cost of financing. And at the same time, the scaling it, so first, whatever it was, 2 or 3 countries, here would be 2 or 3 states, right? And you would just sort of expand it that way all the way to 11 states. That's how they did it. I guess we'd actually have the automakers in there as a vested sort of interest, because they want to drive uptake of EVs also, right? And sort of it kind of becomes a,
You're basically hedging the market based on volume.
Right, that's right. Any other questions from the audience? Okay, go ahead.
So currently, what are the ways that governments basically navigate funding situations and assess the risks and opportunities for deciding which direction would be better to have investment on, and what do you think is missing that can be added for this kind of funding navigation or decision making to become better or even smarter, or maybe more based on data?
Elise, you want to take it, or Mark?
I was going to give a very glib answer, which is they rely on consultants, but Elise can answer more, and I can give us a little more perspective on nationwide.
Yeah, so I would say, addressing the first part of the question, kind of the ways in which we go about evaluating the best possible methodologies. Also, to be a bit frank, it's one of those things at the DOT. There is this traditional side of things, traditional funding methodologies, traditional business plans, traditional business practices. And that is going back to the ways in which we've always done things, which has been federally funded or state funded projects that follow a very rigid box. And that's not always the best when it comes to technology, because that box, up until a couple of years ago, was very long-winded. You planned things that they would die in 20 years, and you knew I would replace them in 20 years. And it was all very cyclical. And so really, the input of this technology has really caused us to have to look at the ways in which not only do we speed up that financing, but look at the different ways in which we introduce alternative business models to be able to do that financing. And so it is something that is, it's that openness to being willing to look at alternative business models, but then really trying to understand the ways in which they fit within the boundaries of the ways in which we at a DOT do business. So looking at the ways in which we can enhance the relationships that we have with our partners, with our P3s, with partners like the Cavenue Project. It's really looking and being dogged in the ways in which we go about introducing new business policies, and then trying to see how we can expose folks at our legislature to understand that, new business models and new ways in working with these partners are ultimately what will really benefit the safety of the motoring public. And I think it is one of those things that is very challenging. And talking about the last part of your question is how, from a data side of things, can we start to justify these alternative business models? it's become a very big challenge, and it always has been. I say becomes, but let's be real. Looking at the ways in which innovation and connected vehicle technology and automated vehicle technology improves safety is very difficult, right? It's very difficult to look at the ways in which we can look at performance metrics to directly show either a level of service increase, which is kind of the traditional traffic engineering way of saying if something's been improved, or looking at the ways in which you prevent crashes from happening. It is really challenging to try to put a number with how much safer are you making something, how many crashes were reduced because of the information provided about the infrastructure. So being able to have more solid information about performance metrics and being able to really look at the ways in which we can showcase the improvements that are made based upon what was prevented will allow us to be able to, I think, really upscale these types of deployments, upscale these types of partnerships, and really look at the ways in which we can move much quicker in this space.
Yeah, I mean, I was being glib, but we probably have 2.5 FTEs on our project with MDOT that are just focused on commercial, right? The person who runs the commercial side for MDOT, like, this was not in his 5-year plan like 3 years ago, right? This is just another thing on his piece, so he has to, really rely on advisors, and I think this is, at least all of MDOT could use a lot more folks. They do, each person there probably does 1.5, 2 persons job per person. But to sort of build this and scale it, like, you're going to need to build that muscle. Virginia DOT, probably has the most successful P3 program in the country, and they've got a lot of brilliant people that they've built that sort of, a very strong focus on municipal finance and sort of, what this ends up working. Tennessee is about to go into a huge program. I was meeting with their CFO last week, and, he's just sort of starting to realize, like, how much he's going to have to build of this whole unit to do this, because, if you don't have that, right, like, the threat is, you either can't do it or you're doing it and you're just going to, not have the ability to sort of have it to the public sector. And, while advisors are great, right, like, they're, they can't sort of clearly represent sort of what is important to an organization, right? So being able to have that muscle inside the DOT, I think is really critical to make these win-win partnerships.
I might add just one other thing, like, on a very global scale, the public-private partnerships are so critical because the governments aren't, kind of picking up on what I kind of hit on before. The governments, they're just not set up to make good business decisions. And I think if you look at China, for example, they had their One Belt project where they were doing infrastructure projects all over the world. Or was it Belt and Road, thank you. Where they were doing infrastructure projects all over the world. It was purely government-backed, and it was kind of influence peddling in some respects. But many of them failed, and so the country is retrenched. They've got a debt problem. This gets back to kind of the return on equity. So you in the short term it works, but in the long term it doesn't, which is why you need these partnerships. And on a picking up also a little bit of non sequitur, but the data things that are coming out of all of these projects are super important. We use them a lot. Like, we have, again, I'll turn to we have a rail business, and it's one of the larger ones in the country. We have an enormous amount of data. We put sensors on all the rail cars that we have, an enormous amount of information about what is moving around this country, how often, who's using it, how frequently. And so why is that interesting? Well, it allows us, you can make a market with anything. And I mean, Wall Street's fabulous at creating derivatives of derivatives of derivatives. And so we use that to hedge our position. So if we're going to be expanding our we were looking at a biofuels engineering company to we were able to create a hedge against it with corn stock. And so all this information is super helpful to get out into the marketplace. Because, again, you can use it in ways that you wouldn't even imagine.
Just want to leverage off of that because of that data piece that he's talking about. So I spent a lot of time in Finland, latest NATO member as of today, I guess. But they started about 5 years ago with mobility data markets. They were very early movers in the digital space. They actually have elected data commissioners. So the city of Helsinki has an elected data commissioners. a set of commissioners. What they now want to do with Nokia in the lead is create data markets around smart infrastructure, whether that is smart roads, whether that's smart buildings, or smart something else. As the question is, what are going to be the covenants around trading data? So, I mean, they're already thinking where maybe some of us will be in 5 years or so, but they were there 5 years ago. They see that the whole data piece to be an integral part of, we thought we have drain commissioners. I mean, they got data commissioners. I mean, that deal with all the covenants, privacy settings, cybersecurity settings. Is this personal data, or is this infrastructure health data? Is it performance data? Whatever is it, right? And how are you going to set that up? Which, I mean, just to very quickly open again to Mark, also to Jeremy, what kind of money do you go after, right? That kind of goes to your question too. Where do you go, I guess, for the money for your projects? I mean, you're going private equity. It sounds like private equity or equity.
No, I mean,
I don't know where Jeremy's going with it, with the intersections. And then do you consider federal funding like TIFIA and all these other sort of sources of money that are out there as well for these kind of projects?
Yeah, so for the project co's, we're likely going to raise around traditional roadway infrastructure companies, right? That usually have long views, right? Have, a set rate of return, often, have a lot of pension money, which is also, very long money as well. So, who are sort of understand that business model. The challenge we have, right, is the technology risk is not something a lot of these companies have experience with, but at the same time, knowing the sort of amount of capital that is sitting on the sidelines in a lot of these infrastructure firms on the roadway side, and the lack of deals that are happening in the U.S., we are creating a pipeline that just doesn't exist in the P3 market. So, but it's our hard challenge, right? Is to sort of be able to make the case to a lot of these infrastructure investors that these are projects that will have good return. And it's why no one has tried this business before, because it's a tough it's not just very clear, but finding the folks that sort of have the trust and the vision is kind of where we are.
You want to comment where you're going to source capital?
Yeah, so for connected vehicle P3s, the landscape was different when the mandate was in place, and there was a lot more excitement from infrastructure investors who maybe didn't really understand the possibilities, but they saw that every vehicle is going to be a connected vehicle. They wanted to get in on the action. But once the mandate was gone, the infrastructure investors were a lot more cautious, and they wanted to see demonstrated use cases. So we actually think that the IIJA has been a great tool to get federal funding to kind of de-risk some of these projects, to demonstrate the use cases and show the infrastructure investors that there are business models that work related to connected vehicles.
Okay, we'll take a question in the back.
So countries are approaching kind of a judgment day with a race to electrification and how we fund public infrastructure through gas taxes. And I'm wondering, through the use of VMT, whether this is a avenue to not only replace gas taxes, because that has to happen, unless you're going to do registration fees that are different for electric vehicles, and through VMT, could that be funding digital infrastructure as well? Would that be more palatable? What are the traffics? I'm sure you guys have all thought about this as you deploy technologies and think about how to fund it. Is paying for those roads by the mile one way to do it, either by collecting data off the vehicle or through deployed infrastructure?
Yes. No, I mean, I think it's the idea of sort of having charging vehicles by the mile they travel or some other sort of road usage charging, and then having certain you travel on certain roads, there's a sliver, right, that is the technology utility payment that goes into sort of that pricing. So I think yes, in a world where that exists, I think a lot of this funding becomes much easier than what we have today, which is sort of a highway motor fund that's declining because of gas tax, sort of robbing to pay over here, and sort of the politics of user fees and, making this big change, is just such a huge political challenge. I think academically we all agree that like what's happening now is not sustainable, but sort of going to this lift. But yes, if you can get through sort of the muckiness of sort of making that change, I think that has a lot more opportunities.
And I'll just quickly add to that there's a lot to unpack there, and there are conferences that are weeks long that just talk about VMT, that go into a lot more detail on all the problems. I think what's important to think about is how can you create an ecosystem where all of these different use cases are possible. And so that's something that connected vehicles, they can facilitate not only VMT, but also all the different safety and mobility applications that are out there as well.
Good. So, okay, great.
So in addition to the data ownership, what other roadblocks do you see for data monetization?
Privacy, consumer.
So you said what other?
In addition to data ownership and which also includes data privacy, what are the other roadblocks to data monetization?
Well, some of it goes to something that Jason said. I mean, pricing. How do you price and value that? So there is a reason why it's the telco companies. It's not the construction companies. It's nobody else. Not the car companies. It's the telco companies that are actually getting into that space of data monetization, trying to figure out how to package it, how to price it, and whatnot. So they're trying to create, figure out, I guess, where the market value is and to whom you're selling. Are you selling to real estate company? Who are you selling to? What's the offtake market, right? I mean, Mark was saying we weren't able to find any off-takers for our data except for the DOT which was interested in that.
So
but there are real estate companies. There are insurance companies. We have a speaker next week from Integrated Roadways. Some of you probably know Integrated Roadways as a smart slab company, and so they're looking at a road as an application enablement platform, and so they're sort of looking into all the different sort of monetization pathways. But there is currently no market for that data. There is no good pricing model for that data. And so that's sort of, it's an inherent problem. How does one create a market?
And does that come back to the fact that they are not really able to understand what are the potentials in the data? They don't know what can be come out of it so that they can put a price on it. Can that be a underlying reason for that?
It depends on, data is a squishy concept. When people talk about data, sort of everything comes oozing out from that. So there's a whole new ontology that's being developed around data in terms of what is its application and use. Is it real estate companies that set pricing or that make decision on where to put a restaurant or where to put, a new apartment complex? That is probably fairly well understood. Insurance companies have been trying to use that data, infrastructure health data, to try to price what the cost is of underwriting the risk on failure of infrastructure, whether that is a bridge or a road or something else. So there are some of these offtake agreements that are reasonably well understood, but most of them are not. And most of the data are not necessarily used by the asset that is generating the data, but by some derivative user or off-taker. But it's a very immature thing, which is why Nokia is trying to figure out that project. Question on the side.
Sure. So partly for Elise and maybe Mark could weigh in too, and anyone, but state of Michigan now has the legislative authority to designate a CAV corridor and something that revenue could be generated on. I guess what goes into the process of designating that, and are you looking for a CAVNU to give you a business model or approve it, or how is that going to be done moving forward?
Well, I can take a stab at that, Mark, first, if it's okay.
Yep. Sure. So we're really focused on the 94 project. So I don't think any of us have discussed what would be a formal way to sort of develop the next corridors. For us, we needed the certainty to be able to have that legislation to say, if we're going to put $200 million into a project, that there's a path for revenue from user fees, which just didn't exist. And giving MDOT the ability to have that authority and not sort of, we needed certainty in the business model. I think moving forward, the opportunities as this project hopefully is successful, MDOT is then able to begin to initiate, no different than how other communities across the country initiate managed lane type projects where, they do initial planning, Pell level studies saying, is this something that makes sense? Then going through, developing and getting the 5-year plan and just doing that traditional planning. So, if you think of it as just a managed lane, right, process should probably be similar to initiating managed lane projects. It's just we called it something different to give MDOT the ability to do so and get support legislatively.
Yeah, so to add to that, I would say, we did have that Senate Bill 706 that was passed that allows us to establish AV lanes and AV roadways. Simultaneously, there's also the tolling study that was done and has kind of stopped at the legislature. So we had this Senate bill that was very supportive of the establishment of the roadways and the idea of the possibility of implicating user fees. But MDOT also, at the same time, not really just happenstance, was doing this tolling study looking at the possibility of being interested in opening up roadways for tolling in the classification in that sense. And that's kind of stagnated in the legislation. So it is a very challenging thing, and I think as we move forward, being very focused in trying to understand what is solving problems that exist for the motoring public, like Mark said, looking at possible Pell studies, looking at the ways in which we evaluate the roadways for best being these types of roadways. I think a lot of it is seeing success and being able to showcase that success to others in the region and throughout the local agencies and say, look at this wonderful, successful project that we've had over here. We'd really like to look at implementing that, in a very common procurement way throughout the state. I think will be much easier. It's taking something that's never been done and really looking the ways in which we can continue to do that and deploy it moving forward. So I think utilizing that as an example will be something that'll be critical for us looking to do that moving forward.
So just to ask a question to that then, so DOT is not open to, or you have not considered availability payments from the public to the private operator to keep open that managed lane? That is not a revenue stream, that is an option?
Well, right now we're sort of just, doing commercial negotiations with MDOT. That's the previous P3 road project that was done on I-75 is an availability payment project. So MDOT has done that type of project on the P3 side.
Great. I think we have got all the questions.
We have time for another question.
All right, Ellis.
Revenue is tough till you hit that tipping point. I feel like you won't have enough and then you'll have, all you could ask for. But until you hit that tipping point, what does the revenue model look like outside of user fees? What are you guys thinking to keep things going until the technology proves out?
Yeah, so that's one of the things we're talking about with MDOT right now of just, what do those early years look like? Because that's, part of the challenge here. So we're having a lot of conversations with them about lots of different ways of where we think we provide some benefit, but ultimately sort of, this is going to, the majority of this ends up being, user fees kind of in a later year of the contract. So, but, this is also, part of what we're trying to do is be able to provide the capital to de-risk some of these things so they can get this going, because unfortunately the conversation on V2X at scale just has not happened for a lot of reasons, and we're hoping that this project sort of like starts that wheel going, and then a few other states can really get it going, and then this sort of becomes the norm in absence of the federal government saying like we're going to do 10,000 miles of connected roadways, which I don't not holding my breath to happen. So.
All right. I think with this, we've come to the end of our hour. Thanks for all your questions. And I think it's been a great discussion. Hope you enjoyed it as much as we did. I'd like to have you join me in thanking Elise and Jeremy and Mark and Jason for their comments on your questions and providing you some insights in funding and financing. Thank you.
Okay, and lastly, Before we close for the day and have dinner and some demonstrations, Umtree Director Jim Sayer will give some closing remarks.